Okay, class. So we are now in our part three discussion in assessment of business equity. So our topic here is the calculation of owner's equity in financial management of agri-based enterprise. So calculating the owner's equity in a financial management context for an agricultural-based enterprise involves understanding the various components that make up owner's equity and how they change over time. So, owner's equity represents owner's interest in the business and is equal to the assets of the business minus its liabilities. Okay, so here's how you can calculate owner's equity. So, first, you need to determine the assets. Start by listing all the assets of the agricultural enterprise. Assets can include land, machinery, livestock, crops, and any other resources owned by the business. So assign a value to each asset based on its fair market value or its book value. Okay, so in agriculture we do have what we call biological assets and also a agricultural produced. So these are some of the example of the assets that are in our agri-based enterprise. Then you should also determine the liabilities. So the liabilities are something a person or company owes, usually a amount of money. So we need to list all the liabilities of the business. This includes loans, mortgage, accounts payable, and other debts or obligations that the business owes to external parties. And then you should calculate owner's equity. So the owner's equity can be calculated using the following formula. So your total assets deducted by the total liabilities. This will be our owner's equity. This formula will represent the basic accounting equation, which states that the owner's equity is equal to the residual interest in the assets of the business after deducting all its liabilities. And then consider retained earnings. So if the agricultural enterprise has been operating for some time, you should also consider retained earnings. So our retained earnings are the cumulative profits or losses the business has generated over time and retained for reinvestment in the business. You can add retained earnings to the owner's equity calculated in step 3. Okay? So owner's equity including retained earnings is owner's equity plus retained earnings. That is number one. Next is your retained earnings equals previous retained earnings plus your net profit minus dividends, if any. And the third, net profit is the difference between revenue and expenses for a specific period. Then you need to adjust for changes. Keep in mind that owner's equity can change over time due to various factors such as investments by the owner, the withdrawals, that is the dividends, and the changes in asset values or liabilities. Regularly update your owner's equity calculation to reflect these changes. And also used financial statements. So financial statements are written records that convey the business activities and the financial performance of the company. So like the balance sheet, the income statement and statement of retained earnings are valuable tools for tracking changes in owner's equity over time. These statements provide a snapshot of the financial position of the agricultural enterprise and help in monitoring its performance. So, students, you need to understand that it's important to note that owner's equity is a dynamic figure that can fluctuate as the business grows and evolves. Regularly, monitoring owner's equity is crucial for assessing the financial health and sustainability of the agricultural enterprise. Additionally, consulting with a financial advisor or accountant who specializes in agricultural businesses can provide valuable insights into managing owners' equity effectively in this specific industry.